and welcome to the Carolinas Luxury Real Estate Podcast, Season 5. For all those new to the podcast, please feel free to follow the link in this episode to our past seasons and explore all the great luxury real estate content. On today's episode, we are talking about the 2022 Fall Luxury Markets Report for Lake Norman in North Carolina. I'm your host, Sam Sparks, and joining me to discuss the Fall Markets Report is Reed Jackson, the managing partner for Ivester Jackson Distinctive Properties. Thanks for joining me today, Reed.
Hey, Sam, how are you?
Well, doing good, other than this rain. How about yourself?
Yeah, it's 40-some degrees outside today, and I just looked at my phone, and it's 68 degrees in Wrightsville Beach at our beach office. So what's wrong with this picture?
So needless to say, you're working from the wrong office today.
Right.
Oh, boy. Well, let's jump on into it. So with all the talk about real estate markets slowing down, how has the last quarter or so been in Lake Norman?
It's been very interesting. I think we've had, and this has been the pattern most of the year, once the Federal Reserve started to raise rates, the more interest-sensitive price ranges, have seen some deterioration in terms of activity, and sell through. So the range between 500,000 and $1 million, is probably off in most of the Lake Norman area by about 20%. And we've kind of seen that pattern show through on the showing appointment side. So expect that trend to continue. As you push up over $1 million, you start to become a little less interest rate sensitive. And so that market has actually had a pretty solid year. The price range right around $1 million up to $2 million. Mm-hmm. And so that range, was trending actually ahead of last year slightly, and has kind of evened out over the last 90 days as interest rates have pushed up. Because you're at the $1 million range level, you're still getting, the majority of the buyers are taking mortgages. Once you push over $2 million, you start to get, more cash buyers and so much less mortgage rate sensitive. So the $2 million range has actually trended ahead of last year, which is remarkable given that we just came out of 2 pandemic years in which, luxury home sales were at historic levels. And for Lake Norman to be, at or ahead of last year's totals as we head into mid-November is pretty remarkable in that ultra luxury range above $2 million.
Yeah. Well, I think that's exactly what Jonathan said out in West North Carolina. He said the ultra luxury market is also trending higher than it was last year. So it's pretty impressive.
Yeah, and I think, some of that I think has to do with the, financial markets have, been a little more volatile than they have in the last couple of years. But yet, as we speak, the Dow Jones is over 33,000 and, within 10% of all-time highs. So I think that's been pushing that higher end of the market.
For sure. Now, Reed, are you noticing differences between the different price segments? Like you were saying, under $1 million, and then above $2 million?
Yeah, for sure. I think in 2 million plus, the showing activity has been, anywhere from 50% to almost double last year. Most of the year at Lake Norman in different areas. And we're even seeing, activity in places like Davidson, where I think we ended the third quarter with 4 houses above 2 million under contract. And it wasn't that long ago that market wouldn't even see a $2 million sale in the entire year. And this year they'll probably have, more than a dozen. So, that price range certainly is, really hot. And there's actually a lot of that activity going on in Charlotte as well. So I think the whole region has benefited at the ultra luxury range. And then I think, realistically, the other thing is if you look back to 2019, we're still at numbers that are, fairly comparable to pre-pandemic numbers in even the lower ranges that are more interest rate sensitive and off year to date.
Mm-hmm. Yeah. So how does the market's activity look right now compared, with last year's activity at the same time?
Well, that's another really good question. In looking at showing activity, which is one of the things we really try to stay on top of because it's one of the few leading indicator analytics that we have. Along with website page views, showing appointment requests are probably the two um, demand-oriented numbers that we watch to kind of tell us what's going to happen over the next 60 days. Mm-hmm. So as of this morning, our luxury showing requests for November in the Lake Norman area have been running about even with last year's November, and slightly ahead in the ultra luxury range. So, while they are seasonally down, of course, from the summer, they're also exceeding last year's numbers at the same time. And even with inventory coming up a little bit, you're still seeing the same average rate of showings per home. So the average home in the $2 million range is getting about 4 to 5 showings a month right now. So it's almost one a week, which for November is, a pretty historically good number.
Wow. Yeah, and you hear those numbers, you don't think that's too high, but for the ultra luxury market, that's right on par, you're saying.
Yeah, I mean, we've had homes. We had a $4 million home here in Lake Norman that had 40 plus showings this summer, and finally went under contract after about 75 days, which 3 years ago would have been fairly rapid sales cycle. But for this market where people are used to having seen things sell almost immediately, 2 or 3 months seems like there's something wrong with the house, when in reality there's not.
Right. Are you seeing price cuts on those higher markets as well, like in the mid 500s?
Yeah, I think one of the dynamics that's occurred is there's a difference between price reductions and price decreases in price per foot. So I think what we've been seeing is price reductions off of historically high list prices. So I think you're still going to see year over year square foot pricing show a slight increase over last year. Okay. It's just the days of, people being able to just grab a number 20% above, the most recent sale in their neighborhood and try to get that. I think those days are past us. And I think we're going back to a market where pricing is going to be based on, recent trailing comps. You do still see some pretty interesting things going on where there's no inventory. Like, for example, in Cornelius, around the $1.5 million to $2 million range, there's just not a lot for sale. And so you will still see there's some interesting price occurrences with homes going under contract at numbers that are significantly higher than 2 or 3 years ago, if they traded, in that window.
Right. Makes sense. Okay. Now, on the luxury front, have increased mortgage rates impacted some buyers, and what percentage of those deals are cash offers?
So that's another great question. I think we kind of look at luxury at 3 different levels. So there's what we kind of call mid-market luxury, which is stuff in the, let's say, 700,000 to $1 million range. And then there's the, $1 million to $2 million, which is kind of your meat and potatoes luxury product, and then 2 million plus being ultra luxury. So in that mid-market range below $1 million, you're probably at about 70% mortgages. And so that range has been more affected, probably off about 20-25%. Just because we're seeing mortgage rates in the 6% range. I think jumbo's just dropped down to 5.5%. And then so in the $1 million to $2 million range, you're starting to push up into a range where you have a slightly lower number of people that are taking out mortgages, or they're taking mortgages against a pretty high level of asset base and can still command a pretty good interest rate off of that. And so that's probably one of the reasons why that range is about even or slightly ahead. And then in the $2 million range, we're still, over 50% cash transactions. And so that range, coupled with the, the financial markets, showing a little rally here in the fourth quarter. I think we're going to continue to push fairly strongly in the $2 million plus range as we move over the holiday period.
Yeah. Wow. 50% cash offers in the ultra luxury. That's impressive. Wow.
Yeah, it's interesting. There's just, if you look back at the financial markets over the last 10 to 12 years since the Great Recession, there's just been such a huge amount of affluence accumulated and there's a fair amount of liquidity. And so, people are also moving to hard assets. I think they, feel comfortable owning real estate for the long term, particularly in North Carolina and around Lake Norman and Charlotte. And so I think, people that have that kind of money are diversifying a little bit even more with, second homes and vacation homes.
Yeah, I know quite a few of those homes on Lake Norman are second homes, and it's crazy to think that people aren't there enjoying that view half the year, but it is what it is. So
yeah, it's become very popular for sure.
Oh yeah. So are we still starting to see increase in inventory? I'm sorry, let me redo that. So are we starting to see increases in inventory, and how do those levels compare to historic levels pre-pandemic?
Well, the answer is yes, we are. We're starting to see a little bit of increase in inventory. Some of it depends on where you're looking and in what price range. So there are certain price ranges that remain extremely picked over. I think if you look at areas like Cornelius and Davidson, there's a little less inventory in the lower price ranges below 2 million and below 1 million. And so we're not seeing a lot of inventory run up yet in those price ranges, starting to see a little more above 2 million. But when I say a little more, I'm talking about going from, a month's worth of inventory to 2 months worth of inventory. In the lower price ranges below $1 million, you're still under 30 days in most areas around Lake Norman. And so, still historically low inventory levels relative to where we were 3 years ago when, our average days on market would have probably been, 70 to 90 days, I think, something like that.
Right. Okay. So what variables will impact luxury real estate activity moving into the first quarter of 2023, and how is that looking?
Well, I think it's very interesting right now because I think if you look at just had midterm elections, and so I think there's been, kind of politically a little bit of a split, and so Wall Street actually seems to like that. I think that makes for a little less unpredictable circumstances arising. And so I think the markets have rallied a little bit there. I think they've also seen the first glimpses of the inflation numbers starting to flatten out at the top and possibly start heading down. And I think that's kind of what the financial services industry has been waiting for. We're still getting some numbers that are a little high, and so there's debate about whether the Fed's going to start reducing the amount of increases. But I think it's still going to be a while before they go to flat or neutral. I think they're still tightening, just a matter of probably tightening a little less than they have been over the last 4 or 5 months. So I do think the market, the stock market and financial markets tend to view that as a positive. And so that's another reason why I think we've seen a little bit of a bump lately. And so I think those variables are going to influence the real estate sell through over the next 3 to 4 months. And I think we're going to see a little bit more of the same, and may see the mid-market end pick up a little bit because we may see rates drop back down, mortgage rates drop back down into the 5s, which will probably seem reasonable compared to where we were just 60 days ago. So interesting, quick ride up, and hopefully, starting to notch back down a little bit.
Yeah. I know everyone's looking forward to those interest rates going back down to the fives, I'm sure.
Yeah,
All
I
right.
think so, for sure.
All right. Well, once again, thank you, Reed, for joining me today and talking about Lake Norman's 2022 Fall Markets Report. It was great picking your brain.
As always, Sam, appreciate it. We'll see you next quarter.
Yeah.
Thanks.
And real quick, how can people contact you if they have questions or need help with real estate?
Yeah, so we're at ivesterjackson.com, which is IVESTER Jackson.com. Or you can just reach out to one of our agents. Look us up online.
Perfect. Well, thank you so much for watching. Take care.